All right, so today is Monday and we're doing our mid-market commentary. It's been kind of an exciting couple of days in the market. Michael's going to walk us through a 5 minute, 15-minute view of the Able Trend charts, why we use those, what they mean. So go ahead, Michael.
Hey, Mark, thank you. Basically, folks, on the NDX 5 15-minute charts, what I'm watching now, looking for a signal maybe to go long or short, either one. But these, the red larger dots here are 15-minute resistance dots, which means a 15-minute resistance level. And then, of course, the small blue ones are the 5-minute support level. So you can see we're trapped in between support and resistance. Really no direction right now. It looks like it's trying to break to the upside, but the 15-minute resistance keeps printing along with the support level also. So really no trade here, but it's around the 42.17 range. The S&P is the same way. You can see we're at 2007.44. That's the 15-minute resistance on the S&P, and the support level at around the 1999 range. And then the Russell the same way. So all three charts are sort of lined up the same. When you get all three charts the same, that's a pretty strong indication that we're going to stay in this range until one of them breaks out. And then if one of them breaks out, the rest of them usually breaks out, then you have a move to the upside or the downside. It depends, Mark, on which one it gets to.
Yeah, so earlier in the live trading room here, Michael, we were talking about the length of a pattern. A pattern can become stale after a while if it's been in that particular trend for an extended period of time. And so to be very clear for people in our live trading room who might be new, or people who are listening to this and have not participated yet in the live trading room, I'm not talking about the overall market trend. I'm talking about the intraday patterns. Michael's sharing with you here a 5 minute, 15-minute combination chart um, that we use from Able Trend. And what we'll see is, Michael, if you could maybe go to the NDX chart and just show how there's that red and green waterfall showing on the 515. Just put your cursor along in there.
Yes.
Yeah, so all of that has been a downward bias trend. And we actually took a couple of nice trades in there, made some money this morning on a couple of day trades. Some of our clients actually who don't day trade, they were able to actually leg into a spread for a positive credit, which is a guaranteed profit, can't lose. But after a while, that red and green waterfall is going to exhaust itself and it's going to reverse and move higher. And as Michael was just saying, we don't know that that's going to happen now because we're trading right up against resistance, the large red dots, and we have support below us. But at some point, based on our experience, we know with absolute certainty that there will be a reverse cycle because that's what these indexes do, folks. They cycle up and they cycle down. And it doesn't matter how much anxiety and fear and ridiculous headlines there is out there in financial media talking about where the market's going and all the negative news and all the things that are going to drive the market one way or the other. It doesn't really matter. None of that really matters to me at all. What matters to me is the signals on Able Trend and whether or not they're indicating that we should take a position to go long or take a position to go short. And that's what we follow. So I think that that picture right there of the SPX, NDX, and RUT charts is a perfect example of you don't want to jump into a trade necessarily right here unless you have a lot of experience and you are aware consciously that you're jumping in prematurely. You don't really want to jump into a trade. This is a perfect time to sit on the sidelines, which is all by itself a strategy. Staying in cash is a strategy when you have uncertainty. So, Michael, anything else you want to share about the Able Trend patterns, signals?
Well, I'd like to, Mark, just really quick. I'm just going to just flip back to 3.9 just for a minute.
Yeah.
So if you look at a 3 minute, 9 minute chart, let's just use the NDX. Technically, we are sitting right against support at 42.06. So you would think, okay, we're going to maybe bounce higher to the upside. Well, the beauty of having frames is like I showed you on the last chart on the 515. I'll flip back over there. We have resistance right here. So if I did get a buy signal right here and this next bar turned blue, it looked like it was going to go higher, well, I probably wouldn't take that trade because of the resistance level at the 42.17 range. So not every time, but it keeps you out of trouble. And like I said, it's not emotional. You follow the signals, and then, like Mark said, then you stay in a position which is called cash until the signal comes to us. So, and there's a SPX 3-minute sell signal right there. So that sell signal, if this sell signal right here closes, the bar started. It's a 3-minute chart. So 3 minutes from now, if that bar is still red, that'd be a sell signal to go short for sure.
So, Michael, let me ask you one question, and this really is for the benefit, especially of the people who are new in the room. How much do you care right now at this moment in time with these signals flashing on your screen? How much do you really care about the news that's going on, about what happened with the vote in Great Britain, about leaving the European Union? How much do you care about that?
Zero.
Are you
It
even
don't.
aware that that happened?
Well, because it's a sell-off, yes. But I will say this though, Mark. I will say this, and maybe we get to it one day. But Abelsys was telling us 3 or 4 days for the vote even came that we were probably going to sell off,
Mm-hmm.
and it did. I mean, I said it more than once last week. You better pay attention to longer time frame chart, and it did. So it's amazing.
All right, so let's flip over to my screen now, and I want to walk through the bar charts and show a couple things that I was tracking earlier today and I'm still keeping an eye on. So hold on just a second, I'll grab this. Okay, can you see
Yeah,
that?
we can see fine, Mark. Thanks.
Okay, so what I'm starting with here is the volatility index chart, a 1-year daily volatility index for the NASDAQ 100. So we've talked a lot about the Bollinger Band snaps in the past, which is when the price moves above or below the 2 and 3 standard deviation Bollinger Bands. Well, what I see here is a pattern where we're pressing outside the upper Bollinger Bands. Now, when that happens, the tendency is for the price to snap back lower, snap back inside the Bollinger Bands. It doesn't happen 100% of the time, and when it does happen, it doesn't always necessarily happen immediately. Here's an example right here where it was outside the Bollinger Band, it continued outside the next day, and then it snapped back lower. It went back outside the Bollinger Band, and then it snapped back lower. All of these are patterns, in my opinion, to pay attention to. Now, the reason that's important to me is because there's an inverse correlation between the volatility index and the cash index chart itself. So if I switch now to NDX, the 1-year daily, let me get back, hold on, let me get rid of that here just a second. All right, so what we see here is a Bollinger Band snap on the lower Bollinger Band. Well, that makes perfect sense because when you have a Bollinger Band snap on the daily volatility index, it's indicating that the price of the volatility may actually decrease. Volatility will typically decrease when the price of the index is moving higher. There's less fear and anxiety in the market when that occurs. So when you have a Bollinger Band snap on the daily lower band on the cash index chart, that means that there is some reasonable expectation that we could see the price move higher. So when you have those inverse correlations that are aligning with each other, that tells me that we shouldn't be surprised. I'm not predicting this, but we shouldn't be surprised to see the price of the NASDAQ 100 move higher. Now, that is then something we will be looking for confirmation of on our Able Trend charts. When we see a setup on our bar charts that could indicate at some point in the future could be later today or a month from now, but at some point in the future that there's going to be a possible move higher. When we see that set up on the bar chart, then we really want to pay attention to our different time periods on Able Trend and look for the trigger that tells us now would be the time to enter that trade. So just kind of wanted to point out that correlation between the um, volatility index on NDX as well as the cash index chart. But now I want to get down to our 10-minute chart. So this is our 10-day, 10-minute chart. Now, what I was monitoring for this morning as we were selling off was I was looking for a natural level of support. And that natural level of support actually formed on the 11 o'clock bar. So let me just drag this over a little bit here. Put that right there. So on the 11 o'clock bar, which was right here, now these are 10-minute bars, we traded down to a low of 41.80.45. That's the low of the day. That's the low of the day. And since then, the lows have been higher lows, a sequence of higher lows, which tells me that we could possibly be in a very short-term rising cycle, very short-term rising cycle. So if I come off of that lowest low of the day and I capture that cycle, it tells me right now we're moving back down to the bottom of that cycle. So one of the reasons, folks, that I evaluate this and I keep track of these types of things is because when we are kind of stuck in that zone on Able Trend between support and resistance that Michael was just showing you on the 515 chart, it can be a little confusing. Well, which way are we going to head? You know, what's the likelihood that we're going to break above? What's the likelihood we're going to break below? Well, I like to capture these short-term cycles because it gives me hints. It doesn't give me the full story and it doesn't guarantee me anything, but it gives me hints. If in fact we are in a short-term rising cycle here that started with the low of the day, and we've already confirmed three tops here, actually two natural levels of resistance here. We've already confirmed that twice. That tells me that if we moved back down into the, say, the 41.96-ish range, 41.96, about 6 points below where we're currently trading, if we didn't break below that, then the next move higher could take us up possibly to the 42.22 range. Again, I will be monitoring that and see what happens if and when we trade down to that 41.96 range. I'm not saying we're going to get down there. We could move higher from here, or we could move below that 41.96 range. Don't know that yet. But I monitor the patterns looking for those natural levels of support or natural levels of resistance, which we were doing for so many days last week. But the interesting thing to me also is that this natural level of support at 41.80 ties back to support on May 6th. So if I pull up a 60-minute chart here, just need to do a little bit of adjustment here. I've been tweaking my charts a little bit as I've been monitoring this. So here's the low that hit on May 6th, right here. And it ties into a declining cycle. Now I'm going to do one other quick adjustment here. Just want you to see how this is done in real time. And I'm going to pull my corresponding parallel resistance right down to this whole series of declining highs right here. So what that tells me is that we could possibly have a valid declining channel that started back around May 6th with a low and is confirmed. That low is actually, as of right now, confirmed with the natural level of support that we formed today. And the corresponding resistance is coming across this whole series of price points here. So the depth of that channel is about 312 points. And as of right now, we appear to be trading in that channel. Now, the red channel, which we had been tracking for the last couple of weeks, that's resistance. What's interesting to me, and it's not really a surprise because this is the way patterns tend to form, this current channel, if it's valid, the one that's highlighted in black, is starting to pull away from that longer term red channel. And that would make perfect sense because if we, hold on a second, there we go. If we are transitioning from an overall rising pattern to a declining pattern, it would make perfect sense that this pattern would start to pull away more and more from the original declining pattern and get into a more significant downward movement. So that's what I'm looking at. That's what I'm tracking. I'm going to get right back down to a 10-day, 10-minute chart now. And I just wanted to share with you, this is what I would be monitoring. So I traded a couple of positions today. Actually, did 3-day trades today. Took a nice profit on all 3 of them. About $850 of profit on those 3 trades. I have 2 other trades that I opened. One on SPX. I opened and I missed an opportunity to take a profit. And there was a nice $300 profit in that trade. I missed the opportunity because the pattern indications were that we were still moving lower, but the index reversed on me instead, so I covered it. And when I say covered it, if you're new to the live trading room, that means I turned it into a spread. I essentially legged into a spread. So I took my risk from $60 a share down to $19 a share, which was a significant change. And then the other trade, which is a rising bias call, long call, I opened that and I have added more contracts to it today to cost average it. And the reason I opened it was because we had a strong Bollinger Band snap on the daily chart. If I go back to the daily, that Bollinger Band snap pattern is significant to me. Let me get rid of this here. See, this Bollinger Band snap pattern is significant to me. The one on Friday, we closed below the lower Bollinger Bands. Today, we moved well below the 2 standard deviation Bollinger Band, and we got into the 3 standard deviation. So those patterns are strongly biased for me that we will at some point have a cycle trend to the upside. So although everything seemed to be falling down, everything seemed to be in a red waterfall, all the news and media is, talking about the activity coming out of Great Britain, talking about well, actually what they're doing is they're using a lot of their typical dire headline words like contagion and death spiral and bloodbath and those types of things, which is just insane in my opinion, when all we really are doing is playing the cycles here. So despite all of that, I took a long position here. I actually bought a 4,300 call looking for an opportunity to take some profit as the index moves to the upside. Hasn't made enough of a move yet for me to take a profit, but I've been managing that trade throughout today, and it would not surprise me at all to see the index possibly move to the upside. I'm going to get rid of this just to clean up the view here just for a minute so you can clearly see where the pattern is. There we go. So you can see clearly that today and Friday, Bollinger Band snap patterns, we moved down, formed a natural level of support. That's another indication that perhaps there could be a rising cycle forming. And the last thing I'll share with you is if we just simply took a look at the high last Thursday, which was 44.67, and we look at a Fibonacci retracement between that high and today's low, which was 41.80, so almost a 300-point move down in essentially 2 trading days. A very simple 38% retracement of that move down would take us back up around the 42.88 range. So that would be 85 points above where we're currently trading, and it would be a fraction of the total move down that we saw in the last few days. That type of cycle movement is not at all out of the question, and it's one of the reasons that I decided to go ahead and take a long call, despite the fact that we appear to be in a market that is more weighted to the downside. It's a counter trend trade, which could potentially take advantage of a cycle movement to the upside. I also know what my fallback is, that I will, if I see that the index is continuing to move lower, I will instead convert that into a call credit spread, and I'm still in a good trade that could potentially end up closing out for an overall profit. So just wanted to share that with you. Was really focused on NDX today. That's where most of my attention has been. Haven't looked as extensively at SPX and RUT today, but wanted to really share with you the perspective of Able Trend versus the bar charts. For me, just in summary, I take it all into account. The bar chart gives me a basis for understanding kind of a macro view. Are we at a support? Are we at a level of resistance? Are we stalling out, etc.? Confirming a resistance, confirming a support. That's what the bar chart does for me. But the trades, other than the trade I took this morning on the Bollinger Band Snap, which was the long call, all the other trades I took that I closed out of and took a nice profit, those were all based on the Able Trend 3 9-minute signals, which is my favorite time period to trade. So I hope that's helpful to you. I'm trying to provide a little bit of a mid-market commentary for you, especially if you're new to the live trading room, or if you've never been in the live trading room and might have an interest to come and join us and pay attention to how you too could make as much as $100,000 a year just by earning $400 a day on average with these types of trades. So Michael, thanks for your insights on the Able Trend charts, and I appreciate everybody being here.